Welcome back. 515 points higher now on the index. So the bulls are in top form as we speak. But it's time for our special offering, Quarter Se Quarter Tak, where for the first time we bring you key earnings expectations from the insurance sector. And who better than Yash to summarize what's expected from this sector in the fourth quarter? Yash.
Well, Hormaz, as you rightly said, 13 companies listed now from the insurance sector, 2 as far as a part of Nifty is concerned, and for the first time that we're covering the insurance sector as a part of Quarter Se Quarter Tak. As far as the fourth quarter is concerned, not expected to be one of the best quarters for the life insurance sector, but some players certainly expected to throw positive surprises here and there. For the industry, private players are expected to grow their annualized premium equivalent or APE in the range of 13 to 15%. That's a wide bracket to consider, but as I said, positive surprises expected from 2 companies, HDFC Life and SBI Life Insurance on the APE side, whereas ICICI Prudential Life Insurance, which reports its earnings today, could throw a negative surprise. Let's now talk about individual companies. The street is expecting a 15% APE growth, 16% VNB growth and a 26 basis points margin expansion for HDFC Life. A balanced product mix is likely to aid strong growth when it comes to value of new business and margins for HDFC Life. From ICICI Prudential Life Insurance, APE is expected to grow by about 3%, VNB by about 7%, and margins could see an expansion of 30 basis points coming in at about 21.8%. For Axis Max Life Insurance, total APE, that is expected to see a double-digit growth of about 10%, VNB at 2%, but the sour point for Axis Max Life Insurance is the margin decline. That could happen by as much as 216 basis points, coming in at about 21.6%. For SBI Life Insurance, total APE is expected to grow by 5%, VNB by 3%, and margins contraction by 43 basis points. Despite that contraction, SBI Life is expected to have the highest VNB margin in the industry at 27.87%. Though APE growth could be muted for SBI Life because of the transition away from bancassurance as a channel and slow growth as far as the ULIP portfolio is concerned. Finally, for LIC, very weak numbers expected. APE expected to decline by 17%, VNB expected to decline by 9%, but the focus on the non-par segment can bring margins higher as much as by 170 basis points to 18.9%. On the valuation front, FY26 basis, HDFC Life trades at 2.3 times price to embedded value, ICICI Prudential at 1.5 times, SBI Life at 1.9 times, and finally, LIC, the cheapest amongst its peers, at 0.6 times FY26 price to embedded value.
Thank you very much for that. We will slip into a very short break. We'll come back with more on the markets and individual stocks. Stay tuned.